Welcome back to our weekly newsletter on the economy, where we bring you the latest updates on business and economic trends. Today, I will take you on a journey through this week's newsletter. To receive our weekly newsletter and stay informed on the latest economic developments, simply follow our website in the description below. Let's get started. The EU and Japan recently solidified their digital partnership, focusing on cutting-edge technologies like AI, 5G, and upcoming frontiers such as 6G and quantum technology. This alliance aims to bolster cooperation in areas like cybersecurity and the data economy. In April, the FAO Food Price Index saw a modest increase, driven mainly by rising global meat costs, while there were slight fluctuations in vegetable oil and cereal prices. The overall index ticked up by 0.3%. And France continues to attract foreign investment, maintaining its lead in Europe for the fifth consecutive year, despite a slight dip in investment projects. Ongoing reforms and the favorable business climate keep France ahead of Germany and the UK. S&P's recent upgrade of Turkey's graded rating from B to B+ highlights the country's improving economic outlook and fiscal stability. Employment in authorship, journalism, and linguistics sectors surged by 9.1% since 2017, with Lithuania leading at 166% growth. France leads in publishing, while smaller EU nations show minimal shares. Turkey climbed to fourth place in Europe for FDI projects in 2023, experiencing a significant 17% increase and creating over 21,000 jobs, notably in manufacturing. Belgium saw an uptick in sales across major trade sectors compared to February 2024, indicating positive economic momentum. And Romania's labor market in 2023 witnessed over 202,000 inactive job seekers, highlighting challenges in workforce participation. Interest rates have surged, marking the end of the zero era. This shift has significant implications across various sectors, including energy transition, oil and gas, and metals and mining. In particular, the higher borrowing costs present challenges for investments in renewable energy projects. As financing becomes more expensive, the viability of transitioning to renewable energy sources is questioned. The oil and gas sector also feels the effects of rising interest rates. Companies may face increased borrowing costs for exploration and extraction projects, impacting profitability and investment decisions. And the Czech Republic continues to maintain its low adjusted unemployment rate, holding steady at 3%, and this stability reflects the country's robust labor market and ongoing economic resilience. Now, the latest IEA report underscores a remarkable surge in clean energy manufacturing, with solar photovoltaic capacity surpassing 2030 targets, and batteries following closer behind with 90% capacity already fulfilled. This surge in investments, totaling over $200 billion in 2023, derives economic growth while pushing the global transition towards cleaner energy sources. And insights from the Global Entrepreneurship Monitor, Luxembourg faces a potential employee turnover crisis, with 30% of dissatisfied workers considering leaving their jobs, especially among younger individuals and women. Job satisfaction emerges as a crucial predictor, with dissatisfied employees 3 times more likely to quit. Enhancing workplace well-being through improved job quality dimensions like income, work-life balance, and skills development is imperative to retaining talent and fostering a productive workforce. And monthly unemployment rate in Ireland for April was 4.4%, up 0.3 percentage points from the previous month. And in April 2024, Ireland witnessed a slight uptick. And this trend underscores the ongoing dynamics in Ireland's labor market and underscores the need for targeted interventions to address employment challenges. And IMF's latest assessment of Asia's economic landscape reveals improved growth prospects and moderated inflation, signaling positive momentum. However, risks persist, including China's property sector correction and trade frictions. Addressing these challenges requires tailored policies, emphasizing investments in capital, digital infrastructure, and workforce skills to sustain growth and resilience. Manufacturing Purchasing Managers Index highlights a resilient global manufacturing sector with steady output recovery and stabilized demand. While tight labor markets exert upward pressure on prices, selling prices remain relatively stable, albeit with regional variations. And this data underscores the ongoing dynamics shaping the global manufacturing landscape. And industrial producer prices down by 0.4% in the euro area and by 0.5% in the EU. And this downturn reflects ongoing dynamics in the industrial sector, highlighting the need for strategies to address pricing challenges and maintain competitiveness. And March trade report for Canada. Gold exports plummeted by 32.5%, impacting overall export decline of 5.3%. Canada's trade report revealed a significant decline in gold exports plummeting, and this decline underscores the impact of fluctuating commodity markets on Canada's trade balance and emphasizes the need for diversification strategies. The latest ITIF report assesses AI development across the US, China, and the EU, and revealing a clear leadership position for the US, with China rapidly closing the gap and the EU trailing behind. The report highlights the imperative for the US and the EU to respond proactively to emerging challenges to maintain competitiveness in the global AI landscape. An Istanbul Chamber of Industries report, Turkey manufacturing sector export climate index surged to 52.3 in April, and it was the highest since May 2023, and signaling strengthened export demand. Major export destinations showed increased output, with notable expansion in the United Arab Emirates, while recovery is observed in Germany and France. Czech Republic experienced a decline, reflecting diverse dynamics in export markets. And what factors are contributing to the recent decline in euro area productivity? The recent decline in euro area stems from various sectors, including structural changes during the pandemic, external shocks like energy market disruptions, and the cyclical nature of productivity growth tied to economic activity and increased profit margins, falling real wages, strong labor force growth, and lower average hours worked per person further influence productivity trends. And bankruptcies. Austria witnessed a surge in bankruptcies at the beginning of 2024, notably affecting the service sector, construction, and trade industries. Financial services, construction, and wholesale and retail trade bore the brunt of this increase. Additionally, there was a decline in registrations of legal units, with the service sector recording the highest number of registrations. Newsletter for today, we covered a wide range of topics. Stay informed and tuned in for more economic news in our upcoming episodes. Thank you for watching and remember to subscribe to our channel for the latest updates.